Hey everybody, good afternoon. I hope you're doing well. I hope you had a great day today. Wanted to come on and talk to you a little bit about the market. I've so far recorded three videos, the first of which was done on October 4th to say that the market topped out. So this is not some after the fact type of a discussion where I say, okay, now, yeah, I think the market topped. I've been saying that for this is my fourth video basically. And again, the first one was on October 6th. The second one is, I think, on the 10th. And then yesterday I did another one. And today I just wanted to reiterate something, which is I got lots of questions about from people via email, text messaging from friends and family members who are saying, so why is the market selling off? What is the cause of this sell-off? I thought the economy is all good and we're doing better than ever before, and that is maybe the case. The economy maybe is better than ever before. But let me just open up my blog post. I mean, not my blog, my journal entry from October 4th. Okay, unedited from again October 4th. So I don't need to read this to explain to you why the market is selling off, but the but I'll go ahead and read it anyway because there's different things, different reasons why the market topped off this time. I mean, topped out this time. Um, I noticed the first thing I noticed was I'm on YouTube a lot because after the close I scan for swing trades. And what am I doing on YouTube? Just listening to music. I have my playlist, and obviously you get these ads, right? These commercial videos. And I noticed that there's a lot of new educators showing up. A lot of them I've never ever heard of before. And why is that? Well, because a lot of people are wanting to get in to get in the stock market when you see there's so much demand for stock investing, then you know we're probably very close to the top. So I noticed that there's a lot of educators showing up, false educators that is, probably, and that's because again the demand for stock investing is so high, um, and when the demand is highest, that's when you run out of buyers. That's when everybody finally commits, finally buys, and then there's no more buyers left. Important figures such as Ray Dalio, we saw him on a number of TV shows, um, saying that the recession probably will start in a couple of years. I also saw Paul Tudor Jones on Goldman Sachs, right? He did the interview with Goldman Sachs, saying that he sees one coming, but it's not yet. When people start saying stuff like this, that it's not yet, it means they're complacent. The right attitude is always, I don't know. That's the right attitude. When you say it's not yet, it's not now, that's actually when it happens because the market usually does the tops out when it's actually least expected. I started personally getting calls from people interested in the market that know nothing about it, that have never ever touched the market. Why all of a sudden every novice person in the world wants to invest in the market? That's because it's been really good, and the last batch of buyers are now wanting in. That's when it tops out because those are the last batch of buyers. Once they buy into the market, then there's no more buying, there's no more demand. So the market, in short, the market is topped out, not because the economy is not doing well, Trump is screwing up the country, whatever, right? Not because of any of these reasons. It's because we ran out of demand. We ran out of buyers. That's the reason. Um, Micro and nano cap stocks getting bought like crazy. That's another sign. Everyone started talking about how good the economy was. Think about it like this, guys. If the economy is the best it's ever been, unemployment the lowest in 50 years, well, guess what? Then that's the top. Then that's the best. Then it's not going to get any better. If it's the best it's ever going to be, it's not going to get better. which means we saw the high. Does that make sense? When I started talking about possible tops in the market, I skipped this one by accident. Nobody paid attention, which means people had no fear. Investors, traders had no fear. I was saying the market topped out October 4th. In fact, if you're in the black room, I didn't just talk about it on the 4th, I talked about it on the 3rd, the day before. How many people paid attention to what I said? Not a lot. Why? Because again, they're so sure about the market that it's still bullish. They don't care. They don't care. They don't think, oh, we could be topping out. When everybody's finally bullish like this, then there's no more buying. They've all bought already. Does that make sense? So we topped out, we're selling off, we're crashing, not for any specific reason, but for the mere fact that we ran out of demand. And what do you expect from a market that's been up for 10 years now? I mean, just look at this, right? Just look at this. Of course. Yeah, of course. That's to be expected. Now, in yesterday's video, I said probably the next we will get to 160 on the Qs, and we're pretty close already to the rising 20 MA on the monthly chart. Now, that doesn't mean we're gonna get there and then go right back up. No, that's not what it means. It means we'll get there. We will probably bounce a little bit, maybe put in a doji bar, who knows? Maybe base and then roll over, or maybe do a W pattern and then go back up. But what we're not going to do is most likely, again, the right attitude is always, I don't know. We take it one step at a time. But if I try to say, oh, I know what's going to happen for sure, then I would be I'd be lying to myself, right? So what most likely will happen is, because this is an area of support and the rising 20, is we'll get some kind of a bounce, or at least some reaction, or a pause, or a doji bar, and then we either if we base, then we could easily roll over, get that transition C rollover. That will take time. Or we might bounce a little bit and fail, put in a lower high. If we bounce and then retrace and double bottom, then that would set up a W pattern, like so. Only time will tell. When we get there, I will obviously update you on what I think is going to happen next. But for now, I'm looking at around 160 as the next target area for the market, for the Qs. The SPY, take a look at the SPY monthly, it's already at target. I mean, pretty much already at target. That's the biggest red bar I see going back to 2011. The biggest red bar in the SPY. The Qs, let me open up the chart. I don't need the intraday charts for now. The Qs is probably the biggest red bar on the entire chart. We had a flash crash in 2015. I know because the next day I made $46,000. It was on 8/24, August 24th. But we got bought. It wasn't such a big red bar. This is so far is a big red bar. We still have about 6 days left in the month, so we'll see where we end up closing. But that's kind of the biggest red bar that I see, going all the way back to the 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 the, the depression, or the recession in 2008. Yeah. So that's all I wanted to say about the market. There isn't a specific reason for the sell-off other than the mere fact that we ran out of demand. Okay, everybody already committed. There's no more buying. Without any buying, and everybody's in it long, as soon as the market starts to fall, people start to exit, and it creates a snowball effect. All right, so that's that. As far as what I'm doing, to tell you the truth, as I said in yesterday's video, still not a whole lot. I don't mean I'm not trading and I don't have, some okay trades, but I'm not, making thousands of dollars a year. So those are my trades for today. I don't want to spend time talking about the nothing, this very tiny little trades that I was in and out basically. So I'll start with I'll show you the. I'll talk about the top, then we'll talk about the DXC, which was the loser for me today. Talk about T. These are all called in the room. Top, T, LRN. Those were called in the room. Okay, let's talk about the top first. The top was a powerful gap that cleared resistance, multiple, in fact, two pivots at least. And so when it pulled back this morning, I did the buy setup. Actually, here it is. No, I don't know if that's it. No, I don't think that was it. So let me go back to the 1 minute time frame and show you the buy setup this morning. It was pretty good, but it jumped, so I only got 600 shares. And then on top of that, I sold half there a little early, and then the back half 5 minute bar by bar, which trailed at 37.30 on the 5 minute chart. I thought it was 37.30, so somewhere here, probably somewhere here, basically. Not the best, well managed trade at all. But it was so jumpy. It had 30-cent spread, and I only did it with very small size. DXC was a really good climber, but was too spready and too wild. On the initial play here, it was great, but it actually stopped out. And then on the replay, I just decided not to do it. It was too spready. As you can see, of course, it worked. If the first one doesn't work on a climactic, usually the second one works. But it was so spready that I decided not to do it on the second time. And then later on it got halted and gapped up. So that's the DXC. I did the T as a short this afternoon. It was a very nice trade. A sell setup here with the market and then right to target, except it dropped well below it. So I had already exited and left, I think, 30, 40 cents on the table. But this was the trade on the T, the sell setup. This is called a sell setup where the stock is in a downtrend, goes back up to the 20 MA and basically ends that short-term uptrend and continues the larger downtrend. Okay, this is a short-term uptrend on the 5 minute, ended it and continued the 15-minute downtrend. LRN was a climber, and this was felt bad about it because as soon as I got out, it collapsed. So, but this was a climactic short. It was very hard because it was so spready. Everything is so spready these days. Look at this, guys. Up, 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 up. Look at the spike in volume at 1:30 reversal time. Stock was up 40%. That's the top. So it shorted and called it in the room under 24, 25 by 24.70. It covered at 23.48. So on on this red bar, and then it went back and then it fell apart with the market. So this was kind of a bummer. And then the FCF, this is from my um, co-moderator Ifan. He put it out. Look at the base. This is one of my favorite breakdowns of all time. I didn't like the timing at lunch. Lunchtime breakdowns don't usually work very well, but this is my favorite breakdown pattern of all time, which is when the stock is bearish, bounces a little bit, goes back down to the lows and bases at the lows. After declining 20, you get the base breakdown. This is it. Now, it's very hard to get filled when the stock is on an uptick, so I didn't get the big size. So, okay, but this was the breakdown and did kind of the same thing later on in the afternoon. Bounced, went back down to the low of the day and broke down again. I traded it twice, but again, and it was my best trade today. But you know, they're hard when they're on an uptick. The stock is down 10%. It goes on an uptick, so you don't get filled very much. So I shorted it with 100, 200, and 300 share orders at a time to get filled. Because when I tried to short it with 1,000 or two, I couldn't get filled. So otherwise, this would have been a much bigger day, a bigger play. Overall, satisfied with this. One loss, and then everything else is pretty much green. So that's okay. I'll keep at it tomorrow. I think tomorrow the gap ups are going to be pretty good. Anything that's gapping up is going to be gapping over a red bar. I noticed that Tesla is gapping up today. But look, Tesla had a red bar. When you have a red bar the day before earnings, that's actually a bullish thing most of the time because it means the expectation isn't very high. When you have a big green bar into earnings, that's not good because it means the expectation is built in or the expectation is really high and the stock typically gaps down. So it printed a red bar, so I'm not surprised it's gapping up. That's what I usually do is I look for red bars into support, into the rising 20, and I look to play the stock long into earnings. Okay? Or if it's a green bar into a declining, like the TXM, which got bought, but a green bar into a declining 20, that's a short, not a long. But that's another discussion for another time. It's kind of a long topic. Um, I'll leave it again. I'll talk about it some other time. Hope you enjoyed today's video. Stay safe and reach out if you have any questions or need help. I'm in the black room all day, every day, and doing well. So if you'd like to participate or take, participate in some of the trades or see how I execute some of these trades, feel free to check out the black room. All the best and talk to you guys soon. Take care.